So there's the probability of total wipeout. And we've seen it time and time again within the financial system. We've got these other risks that we don't understand, such as the debasement of money. These are risks we don't really understand. There's also confiscation risks, and we see that periodically. Basically, we're seeing it in China now. We've seen it in Russia in the past. We're all running risks. Then we've got a pension system that's underfunded. And so people don't understand that the fact that what they think is a retirement nest egg, A, is going to be worth less in real terms, and B, is not enough. And we've also got the social security or state benefits system, which is underfunded, which could bankrupt governments. We've got a lot of these big existential risks. Are we getting rewarded for them? That, I don't think we are. We're not getting rewarded in government bonds anymore for the risk of something bad happening, whether it's excessive inflation or whether it's a government defaulting, which almost happened in Europe. So right now, Greek government bonds are negative, but if the ECB wasn't there, they'd default and you'd lose all of your money. So Bitcoin looks riskier because it's more volatile. But what a professional does is look at the risk reward. What is the risk? Well, the risk is probably, call it 75% downside over a 2-year period. Is there a risk of it going to zero? It's almost negligible now. So let's call it a 75% downside. Well, still on average, it goes up 213%. So that's a 3-for-1 risk reward every single year. And over a 3 or 5 year time horizon, it tends to go up like 10x. And generally only with one of those drawdowns of that magnitude. So it's much less risky. Also because, as you talked about before, it's actually not correlated with other stuff. So most of us have legacy pension systems and houses that we bought and other stuff. Well, how does Bitcoin fit into that? Well, it's not correlated to all of that. So it offers benefits. So if the world goes to hell in a handbasket, chances are Bitcoin's going to appreciate in price. So it's a hedge. It's how people use gold in the past as well. But this happens to be gold for the digital age. And that's a very powerful thing. So it may be perceived as risky, but again, you're also looking at it through linear eyes. Just to explain to people exponentiality versus linearity. So if I take 20 linear steps across my office and into my lounge, I get, call it 10 meters across. If I take 20 exponential steps, I go around the world like twice. That's what people can't understand. How can that be? But that's what exponentiality is. So that is going to be volatile by nature, but it's going to be offset by the returns that you get. Firstly, okay, how does this financial system manifest itself, the blowing up? Is it going to end in a bang, which is what everybody thinks? So the dollar goes to zero and everybody blows up and all the banks blow up. That's not going to happen. And the reason being is they've discovered a magic trick, which is you keep printing money and you hide it. But what that actually does is lower the value of your purchasing power. So if you look at it in different terms, your same salary buys less of a share of the S&P 500 bar of gold or a share of a Bitcoin than it used to before they started printing money. And every time they print money, these things keep accelerating away. What are assets? Assets are your future consumption. You store your money in an asset, and then later you sell it to allow you to spend it. That's what assets are. So you're being able to buy less future consumption, i.e. you're poorer in the future. And so that creates a big problem. The other thing is the governments have kind of bankrupt by having spent so much money trying to bail out the economy so many times that they're going to tax you more. So therefore your income's going to be less, your future's going to be less. This is not good. And they've got the risk of banks blowing up and other things, which means you could lose all of your capital. So you've got a sinking ship. It's probably sinking slowly, but like the frog in the boiling water, you don't really realize it, and most people don't really understand it. They keep looking for the wrong thing, the dollar to go to zero or something to happen, and they don't realize they're already getting screwed. But there's the life raft, which is Bitcoin. Because Bitcoin, with its restricted supply and its outside of the banking system, no leverage, basically, or over-collateralized, with the recorded ownership, is a way of putting your assets into something that over time should do extremely well. Even if it's just because the central banks keep debasing the currency, Bitcoin will go up just by that amount. But as we know, it also gives you a call option on the future. So what you've got is an asset class that's currently, just Bitcoin alone, is currently just under $1 trillion today. If we look at the size of the global equity markets, global bond markets, global real estate markets are all between 100 and 200 trillion dollars. So what could Bitcoin be worth if that life raft takes us to dry land and gives you a chance? It's probably worth $100 trillion. So it's got 100x to go from here. Nobody watching this or listening to this will ever see an asset in their lives go up 100x that's already gone up 2 million%. So it's the opportunity of everybody's lifetime to actually create wealth, and it protects your wealth for the factors such as, excessive taxation, although you can't really get out of the tax system, but it gives you optionality. It also gets you out of this currency debasement cycle that we're in. Also, we're in a very difficult world. Part of my exponential age thesis is the rise of technology such as AI, robotics, and all of these things. These are all going to be taking jobs away and opportunities. Salaries can't go up over time because you're competing with the machines. And if not, you're competing with somebody else elsewhere in the world. And we've got the baby boomers in the workforce at the same time as their kids, which has never happened before. So there is no salary going up. So the only way of generating wealth is to make the right investment decision, or be lucky enough to start a business, or be in a business that pays more money. So that's the magnitude of the opportunity of this life raft and what it can do for people. So whether they like it or not, it's happening. And behind closed doors, of course, the ECB understands that it is supporting the entire European Union by using its balance sheet, and it's printing money to do so. And this is not a good situation, and the banks don't operate. The UK also knows that its banks are broken, they don't operate properly, and the life systems on life support, and it requires monetary printing because there are no interest rates. The Federal Reserve understands that, the Bank of Japan, everybody. They're just not going to tell you, because if they do, you'll have a loss of faith in money. So if they see the parallel financial system, these are not alien creatures. They'll go, you know what, this is pretty useful. Maybe this is the collateral for something that we can use. Maybe we can get away from the excessive leverage. Maybe it brings monetary velocity back. And the answer was very quickly, we should join it, which was central bank digital currencies. We get it. This is where it's going. And we've got a broken banking system. So central bank digital currencies allow us to maybe circumvent the banking system, be able to give money directly to people or businesses, and to get around monetary policy, which has reached the end of its limits. So then what they're doing is telling you, okay, we get this. We're going to dovetail in with it. But we as governments need to make sure, if we're going to provide you with roads and garbage collection and all of this stuff, we need to get taxes paid, because if not, we're going to go bust. So as long as we can tax it, as long as we figure out there's no criminal activity going on, we're kind of okay with it. Because right now it's not big enough to matter. Whatever people in Bitcoin world think it is, a $1 trillion asset is noise. When it gets to $100 trillion, yeah, okay, it's the size of the real estate market or stuff like that, and it becomes more important. We know this is coming. It's a network. It's growing ridiculously fast. What we need to do is try and slow it down so we can get our ducks in a row, which is how the hell do we regulate DeFi, NFTs, social tokens? How do we regulate the metaverse? All of this stuff. They have no idea. But governments don't want to do that because they have to walk away from things that they have taken to be truths, which is that some people should not be allowed to invest in riskier things, right? So that came out of probably the 1930 crash, and there was a lot of scams going on. And what the banks did was lobby to say, we should have control over how the capital gets allocated. We can't give it to the people. And the governments go, yeah, that makes total sense. These guys are all getting screwed here. You guys are sensible. What it meant for the banks is obviously a windfall gain that they control the whole system. And that's the Securities Act. If you call it a security, then basically you have to go through a bank. We need to get rid of all of that. And I think they know it. I mean, Gary Gensler's got to feel stupid in the US standing up saying, we think this is a security. They know that it's not security. They just don't know how to make sure that people don't get screwed and they get their fair share of it, and they kind of get some ability to manage the pace of appreciation of the adoption before it gets rid of all the banks. Because you don't really need money centre bank. Why do you need Barclays in the UK or some bank in Ohio? You don't. All those European money centre banks, you don't need them. Because with DeFi, fintech, central bank digital currencies, and Bitcoin, you've basically got a whole financial system built for you. You've got borrowing, lending, saving, collateral, and you've got transfer of payments, instantaneous. So it's there. And that's why I keep talking about this parallel financial system that's being built. That's what's going on. So regulation is only going to create more adoption. So all of the institutions, all of the investment advisors or IFAs in the UK will advise their clients to do it once they know that they can't get into trouble for recommending it.